Traders, I'm looking at the euro dollar. Let's just go out to the weekly and we'll do a quick top down. Oh yeah, you can see I've been involved with this before. We've got this current level here trading into key resistance, and what I mean by that is see these highs here through here and this one now. Alright, so prior to this sell, there's a ton of stops that were placed into the order book above here. Right? So we've got buy side liquidity, buy stops sitting up in here. This has traded up into it and taken that out with vengeance. So you can see there's a bit of a reaction here. Okay, so it's retraced. And you know, when you trade into a big level like this, you could expect potentially a significant retrace, perhaps something like that. Right, so that's due to having traded into this liquidity pool. Now I'm bullish, and my targets, well, at the moment, this high, we're trading into it. The next target for me is going to be on this level here. So we could call that resistance, if you like. Let's just do that. So that's the weekly, okay? It's a higher time frame perspective. We can see that institutional order float. If we go out to the monthly, this will give us a bit of an idea. All right, now, can you tell me whether this is bullish or bearish at the moment? It's not easy to pick, but I would say, if anything, that big players would be bullish, mainly due to this, where are we? This through here, this bullish price action through here, right? But I mean, look, if we take all the markers off, we can see that this is it's kind of range bound. I mean, this is a monthly time frame. This is way out there, but what we can glean from this is that, yeah, definitely bullish, right? But here's the thing: see how this is trading into the upper end of this channel here. So you want to be a little bit careful. Daily, come back. Right, that's the channel I'm talking about here on the higher time frame. Right, so from a liquidity standpoint, in other words, we'll just go to the weekly quickly and then we'll go back down. Let's just clear all this. Okay, we've established that we're more bullish than bearish. We have a bias. All right, this is a target. We're trading into big liquidity right there. And yeah, now I'm thinking I'm going to be a little bit careful with this, because here's another thing on this time frame, and this is really important, like the daily time frame draw on liquidity is this high here. Right, so we've got this weekly level up here, but yeah, on the daily, right, there's a couple of things going on right here. We've got, see this green candle here, this green candle prior to the sell. Let's just mark that up. That's a bearish institutional order block. So we'll just label that. Alright, so it's traded into a daily bearish order block with a vengeance. I mean, it has pulled back, so I'm a little bit reluctant to get involved chasing this at the moment. Look at this price swing. Now, this is the daily time frame. So as far as big money is concerned, their accumulation is going to occur. Right, this range here that you saw, well, this is a daily time frame, right? But this is definitely an accumulation range for big money. So they trade up, but they're trading into a huge liquidity pool. Right, so I'm expecting to see some kind of retrace. Then again, we've kind of had it. You hit it here, it pulled back, it's pushing up again. I don't trust this, guys. And I mean, look, can it push off and trade north from here? Yeah, definitely. But given the fact that it's taken out these stops above here, this is big. This is a big level. I'm inclined to play it safe, right? And this is my my strategy. 4-hour time frame, swing low, swing high, retrace into equilibrium. In other words, 50% of this price swing buy. Okay, swing low, swing high. 50% of this price swing comes in around here, 50 to 61.8 on the fib. Okay, now occasionally you're going to see these price swings kind of get away on you, and the pullback was very shallow there. We had a lower high as well, so you'd probably want to look to avoid getting involved there. Here, where we are currently trading, well, we've got a swing low, swing high. That retrace would have been a good entry point. But there's two things with this. Like, we could pull a swing point now from this value area low, and we've already had a pullback into the 50 with this price swing. You know what? Given that we're trading, look at this red zone, given that we're trading into this, I'm inclined to just play it safe and go for this swing point, equilibrium. And there's also another reason for this. Let's just have a look at this here, for example. Okay, 4-hour time frame. We've got, well, this green candle, it pushed up with a vengeance, and there's no candle left or right until here. Right, so we've got this bullish imbalance. Okay, the market will look for two things. One, liquidity. Well, it's hitting liquidity above here now, big time. So I'm wondering whether that's enough for big money to pair their orders for a decent pullback so that they can then hit the liquidity that's sitting under here in terms in the form of sell stops. I hope this is not too complicated, but you know, you got to look at the market from a liquidity standpoint. Like, where is huge money going to be able to fill their quota? All right, and a pullback down into here, especially. And look, the other thing that you want to consider is the market needs to be balanced, right? So it's traded through here with this bullish candle, so we have a bullish imbalance, right? So I'm looking at this imbalance coupled with, let me just grab a Fibonacci, swing low, swing high. See this 50% on my Fibonacci here, 50 to 61. This is my sweet spot, guys, and I'm going to go for this wider swing. It may or may not pull back into it, but I don't want to get involved up there. This is trading back down into a discount zone. So we've got the equilibrium in terms of this price swing, right? 50% of this, and you know, anything under this is regarded as a discount, right? Not my concepts. You know, I've got mentors who I've learnt from, and I'm basically putting forward my interpretation of what I've learnt and what have you over the years. Okay, so this would be an ideal entry point with the combination of this imbalance and a pullback down into the 50 to the 61.8% Fibonacci zone. Now, two ways you could approach it. One would be to set up a limit buy. Okay, set and forget. It's a bit of a risk, but let's do that. And you know, we've got these target areas now. So look, there's a 4R. That's nice. Yeah, something like that. So that's speculation, pure speculation. If you're not in front of the charts, well, that's what we can do. Now, look, if this happens to wiggle around in here and continue north and leave me behind, then fair enough, let it go, and then we come in and look for another opportunity. But my opportunity is always going to be, if we do this, kind of miss the boat on this pullback here, fair enough. So it trades north, it comes back down, there's another opportunity to get long, possibly, on that pullback. So we're just looking at a trend continuation strategy. And again, if it carries on from there, you come back down into support, and we look to get involved here, for example, right, in a perfect picture trend scenario. Sometimes it kind of works out that way. I mean, that was really nice back down in here early on. Well, some of these trends can be really nice to get involved with. Anyway, I guess I think that more or less covers what I wanted to go over in the video. Yeah, just Monday I'm a little bit cautious. I don't want to jump in too aggressively, and I'd set up a limit buy, and just see how the market unfolds, and let's just see how it settles after the weekend. And there'll be some opportunities, that's for sure. There always is. Okay, guys, that's my take on the euro dollar. I would love your comments below. Definitely share the love, and your thoughts really matter. Okay, the more we share our ideas with each other, the better our community is. Okay, with that, have a great day. Safe trading. See you in the next one.